Good morning, everybody. Happy Monday. Troy is off doing exciting things. Dan and I are holding down the fort.
Yeah.
Happy Monday, Dan. How are you, sir?
Doing good.
Perfect. All right, guys, we're going to kick the show off, and here we go.
Back. Troy's dreaming big like LeBron. Matt's back testing like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Well, how was your weekend, Dan? What exciting happened?
It was good. What was exciting, I read something. Matt lives in Indianapolis.
Yes.
And I read, they always have these things like best cities to live in or whatever. They had something, the top 10 cities in the U.S. for jobs.
Yes.
Robust job markets. Now, Indianapolis, for whatever, they had number 10.
Okay.
But hey, they made the top, and some of your.
Very good.
I think number 1 was Raleigh with their,
Durham,
what do they call it? I keep thinking the Bermuda Triangle.
Yeah, like the Tech Triangle.
Yeah. They got that. They got your Austin, Texas. It seemed like a lot of Southern.
Yeah.
Other than
Southeast.
Someplace like in Maine or something. But I thought shout out to Indianapolis.
Shout out to Indianapolis. I mean, we are like, I think we're like a lot of places where there have been an influx of people moving from other states.
Yes.
To seek maybe a lower cost of living. And this may be less interesting to our international folks. So shout out to the international folks. But in the US, there's a wide disparity between cost of living. The US is so big in different markets, and a lot of it has to do specifically with the property taxes of what it costs to own property in certain places. And speaking of property taxes and disparities, Dan, Chicago, kind of famous for having unreasonably high property taxes. I remember in my former life, used to deal with a lot of folks from Chicago, and they would come down, vendors or customers or whatever, and we'd start talking. And a lot of folks in Chicago pay more for property taxes than we would pay here for the mortgage payment.
Oh, it's
insane.
Well, that's where you see a lot of people from Chicago that will move anywhere but south.
Yes.
Towards Indianapolis and that area, and then they'll start going into Tennessee and different places because the property taxes, you can be, just give an example, let's say a $400,000 or $500,000 house that someone bought 25 years ago in Chicago. It could be, let's say it's worth $500,000. You're paying $12,000 easy for property taxes. So if you're on Social Security or something, it's
half your payment going to your property.
My mother-in-law's got it. Yeah, it's brutal that I mean, they get a bit of a break, but it doesn't bring them down to, to in Knoxville. I don't know how it is in Indiana. If you had a $400,000 or $500,000 house or $300,000, you're paying under $1,000, right?
Yeah, here we had a property tax problem. They cap it at 1%.
They cap it at 1%
value, so you could pay about 1%, which is still higher than Tennessee, but it's at least where it's going to be. And
Chicago. Right?
Yeah, I mean, Chicago, you're talking 3, 4, 5% of the value of the home you pay in taxes every year. It's like,
Well, and the other thing with Chicago, I mean, I love Chicago. I always, spent 95% of my life. I think the only thing now is it's this safety, right? It's like, hey, companies like Citadel with Ken Griffin, they moved out of Chicago.
Yeah.
They're saying, hey, we have all our workers downtown, and he had safety concerns on that. And I mean, that hits at the core. I don't care what family you have.
Got to start.
He's at the top two, right?
Yep.
Top one. And if you can't so I think that, hopefully they get it right with who's ever in what political party is. Hopefully they get it right and just, hey.
It's only, not to get political, but it's only ever been one political party for my lifetime. So.
Yeah, it has. But I mean, some people in that political party have done a better job than others. Like when the Daily family would be like the Bonanno family in New York. I'm joking as far as the mob. I mean, but you know what? When the Daily family ran Chicago for many years, many years, up until maybe the 80s or 90s, maybe, you know what? Things were working, right?
They had a system.
They had
a system.
That's it, man. They had a system. Yeah.
They had a system.
Yeah.
Well, we got a weather break here. And I'm doing something very uncouth, which is I'm eating on stream. I am muting myself when I eat because I didn't get to finish my breakfast, but it was so nice outside. I smoked a pork for 14 hours on Saturday and have been enjoying it ever since. And when you smoke that early, you wake up in the middle of the night to start it off. So I'm mostly recovered from the sleep, but still got plenty of pork breakfast because that's what, I mean, as you say, there's no better breakfast. So
no.
Straight meat right out of the bowl. So, Dan, what's the market looking like? We had a little bit of a day on Friday, bit of excitement, huh?
Yeah. Let me give a little bit, just coming from last week to this week. And I'm going to use the theme. It's alive. Thinking of like VIX.
The VIX. Yeah.
If you look at Monday or Tuesday and Wednesday last week, I would say, a lot of people who are trading, I don't know everybody's positions, but a lot of people would be long Vega, and they're probably short Delta a bit because the market had been moving up. And you're in this mental state that we're just going to tortuously trend up. Volatility or VIX is going to go down, and that's the end of it. VIX is going to go down to 12 volatility, and the world will be over as we know it. And then came Thursday. Sunshine started to come out a little bit. We hit highs last Thursday.
We opened up at all-time high. Did we open up? That was
that was the day.
High, right?
So Thursday, here's the thing. So a couple quick things. If you just look at the ranges last week, just to give you an idea, and as range-bound traders, depending on the strategy you have, generally, many range-bound strategies love it when there's no range. Some range-bound strategies, like a DC, hey, you can handle a bigger move, right, than a tight iron condor or something. The range Monday was 25 points last week from high to low. Nothing, right? If you had a 0 day on and you lost money, you need to go to the 0 day doctor, right? There's no way. Tuesday, 45-point range.
Yeah.
Wednesday, 60. Okay. Thursday, 100-point range because we went up and then catapulted down. And Thursday got the VIX thermometer moving a bit. We almost closed at 17 on Thursday.
Yeah.
And then Friday was the, hey, it's alive. VIX went past 20. You had a range of 75 points. Gaps last week, you had two big gaps last week. Thursday was 67 points up. That was that big monster Thursday morning. And then boom, it came down. Friday was 53 points down. The high and the low for last week, the low was 62.12. The high was 64.27. But that's all Thursday and Friday. Monday, Tuesday, Wednesday, we're not. I mean, we're just talking Thursday and Friday. So VIX closed at 20. It's going to probably open up at 19. But you think about from a VIX, we closed a week ago Friday at 1493.
Yes. Got below
1493. And so we closed Friday a week later at 20. The expected move for last week was 75 points. SPX last week, as of Friday, was at 62.38, down 150 points last week. SPX, more than the expected move.
So
right?
double
easy. Yeah.
Right.
Maybe a little bit more because but again, the expected move was, because the vol was lower, right? The expected move last week was plus or minus 75 points. This week, because you're starting with a VIX of 20, and that's the main input into the standard deviation formula, it's plus or minus 133 points.
A little more excitement, huh?
A little more excitement. I'm not sure we'll move 133 one way or the other, but that's on the board. And, so we'll see here if this is just kind of it looks like SPX could open up 35, 40 points if this is kind of a little bit of a quick rally here. But I think let's say it this way, if you're doing double calendars or mixed month trades, Thursday or Friday was Nirvana, whatever that means, right? Yeah. It was Nirvana because it's like, thank you. Thank you that,
shorts were expiring while vol was
Thank you for justice. Yeah. You couldn't ask for better. You're probably a little bit short delta. Market goes down, volatility goes up. You had a big enough move. It was fine. Now, if you were doing 0-day stuff, well, a lot of it, people say, well, 0-day people got killed. Well, wait a second. We gapped 67 points down, right? So you couldn't get in until we were down 67 points on Friday. So why did you have to get killed at 0-day? You didn't.
Yeah. Right?
I
and
did
hopefully you got the benefit of selling that high VIX.
Well, and again, there wasn't that big of a range once we opened down, right? We opened down 67. And what was the finale? We were down 100 points, right? So we were only down 33 points from the opening print, right? So for 0-day, I didn't do any 0-day on Friday, but I'm you could just look at the numbers. It was pretty good, right? I would think. So I think people are happy that you're getting a little more volatility. Yeah. I mean, August historically, Matt, is
kind of dumpy sometimes, right?
Well, yeah, it used to be up until I was just Googling it today because I wanted to find out. It was up until the 50s or 60s, at least what I read, that it said it was good. But now they're saying it's bad. But I said, what is bad? Yeah. Almost 1% down, which, is something, right?
It's something kind of a small down.
Well, small. Yeah. So I don't know if I'd put too much weight into it. Plus the fact that we're near the all-time highs. So I don't know. I mean, I just think that, a little more volatility here. I would expect at least early in the week, but we'll see what happens. But anyways, I think the Thursday and Friday was it was for people with mixed month trades. It was like Thursday and Friday. It's like you didn't have water on your grass for 2 months, and there was justice. Yeah. Would you call it just? I mean, Matt, how would you like having some mixed months trades?
It's just a little bit of a reprieve, But VIX has been high enough, and it's been a gradual enough of a crush that, depending on how you set up your calendars or your diagonals or your whatevers with deltas, and if you skew them one way or another, I mean,
that's a good point.
But that situation where you have a big gap down in a market that Thursday, I'd have to go look at the chart, but I mean, Thursday started with that all-time high, but then Thursday itself let me pull it up, had a big enough move to where the VIX was a little bit excited going into Friday, wasn't it? From memory. Was it not?
I mean, it closed Wednesday in the 15s.
Okay.
And it closed Thursday near 17. So maybe it was up like 1.5.
Yeah, a little bit. I mean, which is crazy because we had almost 100-point move on Friday or on Thursday, and we had opened up at the highs and closed at the lows. And again, Thursday, if people remember, Wednesday, we had some tech earnings that were very juicy and, had a couple of the tech companies up big. We opened Thursday and then we fell from 27 down to the next, closed almost at the low, down almost 90 points.
And one quick thing, I think when people look at it and they say, well, did you know, it's easy to look back and say, but did you have any idea Thursday or Friday, which were the big ones this week, we're going to be busy? Absolutely. Right. It's like saying, if you open your eyeballs, right now, they were catalysts. Let's say that. You had plenty of catalysts. You say, Dan, what catalysts did you have? Wednesday, you had FOMC.
Yes.
Right. And you had big tech earnings, 2 or 3 of them after the close. Right.
The iron was hot to strike.
Iron was hot. Then you have, so that's going to affect things on Thursday. And then Thursday, you've got more big kahunas coming out. You had jobs, you had PCE, so Thursday and Friday, you had a ton of catalysts. And that's why I think it's important, always going back to the data, because it's funny. I'll talk to students and stuff and they'll say, PCE's coming up, Dan. Let's stay out of trades. I'm like, and I just say a simple question. I say, okay, can you even tell me last PCE what the market did? No. So you have no data, but you're going to say stay out of PCE. And I'm like, that's what's great with the you got a lot of data, because I can tell you, just if you asked me, Dan, would you say most of the time with new stuff, do we really do a whole lot? I'd say it feels like no, right? So you got to juice it with, what do the numbers say? But I think people, it is amazing to me. They're always quick to say, it's the FOMC.
Right.
We got to stay out of short-term trades. I'm like, why?
Yeah. And that's our approach with OO is that we have a very customizable date selector to where you can backtest any series of dates you want.
See, that's
or exclude any series of dates you want, going back to, it's 12 years now of data going back to 2013. So the reason we did that is because there were people, and sometimes still people ask for, hey, can we get this as a pre-selected date field or this is a pre-selected date field? The problem is that there's such a wide variety of backtests that people run on OO. And what is common to one person is not common to another. And you can already have any list you want in 2 clicks. You just make a list, copy, paste, done, 2 clicks. Yeah. So what's interesting is, like, you're right. Like these, some people started tracking when Trump had a daytime press conference.
Yeah.
And like, do we trade or not trade during those? Do we, adding a high amount of discretion, which is completely understandable. And the way we choose to deal with it in the backtester is let you do whatever you want, which is you can set it up and then blacklist or whitelist whatever days you think are good. And so speaking of, I actually was playing around. Can you see that backtest? Okay. This is this RIC that we talked about. We did a video on it, I think two weeks ago, maybe.
Yeah, I think so.
And it's an old RIC of, let me see if I can zoom out on it here. Okay, there we go. It's an old RIC of, from last fall. It's a backtest from last fall that has this additional thing of floating the entry and then entering when VIX has an overnight move down. And what I thought would be interesting is just spend a couple minutes looking at this and working on iterating. So taking the backtester, taking a thesis and saying, what are some other changes that we could make to this thesis that would be interesting to backtest? And so the first thing I thought, since this is a RIC, this is a debit trade, and we're using percentages. And so the trick with using percentages is it doesn't take into context the market, the vol. It's just a flat percentage. So sometimes you're going to get RICs that are very inexpensive. So here's one for $9. And then here's one for $19. Here's one for 21. Here's one for 18. What is the difference? Because it really changes the risk reward. Well, the difference is the environment. And so you look at this date back in April, it was $21 to enter a RIC. Now it did hit max profit, but your max profit was only 25. Again, it's going to depend on the environment. And so I thought, if you're in a debit trade, what are some ways, and you want movement, what are some ways to impact the pricing and to make it cheaper? And Dan, what do you think about the idea of maybe moving these strikes out a little bit farther and seeing how it does?
Yeah, I think two ways, like you said. You can move it further. You can either move them further out if you want to lower debit, or you can narrow the strikes, right?
Yeah, so let's do this. So narrowing the strikes is interesting. Let's we'll balance the trade again, and we'll run this back test with
because technically this is really, what you call this, a reverse iron butterfly, in the sense that, I mean, a rib, just because I want to get the McRib McDonald's in
when it's at the money. Yeah. And so here's what's interesting. So what I did was I took the call, which was at the money, and I kept it 0.5% wide, just to make sure it was a little bit, a little bit of a big enough strike zone there. And this changed the win percent down to where you lose about half the time. Now we're just going back since dailies here. So we've got 3 years, but we do have 200 data points. And this is every day. We're not excluding Mondays. A lot of RICs, people exclude Mondays. There's not a Monday exclusion on this one, but we could test that. But here's the point I'm trying to make. It has a pretty big impact on what this thing costs, and you win a lot less. So your win rate goes down, but I mean, these trades cost a lot less in the back tester because wow, is this right? That's so crazy. I guess it is. I guess it is right. That it takes me a second sometimes to look at this and think, wow, look at how cheap this thing was when vol was cheap before Christmas. This is crazy. And so here, you heard me live. I looked at it and I was just shocked. How is this RIC $2.15 on SPX, or $3? Well, here's how you can do a quick verification. If you look at it, you can pull up the trade replay, and you can, by the way, if you didn't know, you can isolate different parts of the trade replay by clicking on it. So we'll isolate the VIX and the underlying out. You can see, man, this thing, sure enough, it was late enough in the day, even just after 10:30, the market expected absolutely nothing. And in this case, the backtest was rewarded with some movement, and it won over 3x of a winner. As you can see, going back, a lot of times this trade still costs a decent amount, almost $19 here a year ago. But when you do it like this with the percentages, again, you're VIX agnostic almost, and it's still a valid backtest. It's just a different way of doing it, whereas Delta considers the VIX environment using a percentage like this is VIX agnostic. Dan, what do you think if we play with this a little bit more?
Yeah, now this one would be more, I'm just trying to look at this tweak. So what's the tweak you made on this?
Yeah, so we moved the call from being an at the money call 0.5% wide to being 0.25% out of the money. So if we look at the last runs of it here, the market opened at 62.30. We were buying the put and the call. The longs were both 15 points away. So you need a little bit more movement. Originally, why I skewed it to the downside and left the call side, the call debit spread, which is half of the RIC, why I left that at the money is because a lot of times you see this where it's just markets go up over time. A lot of days, even on a daily basis, maybe totally uncorrelated to the markets go up over time statement, but a lot of times you'll just have a move up during the day if there's not a reason to move down. And so when you put the call debit spread right at the money, a lot of times you could prevent the tent of doom. If we don't have much movement that day, you still get just enough, a couple of points to get either a small winner or a small loser.
But you're in here, you're still leaning why you have it's an amazing thing. Why you have a negative theta trade.
Yes.
Over time.
Yes.
Doing well. And part of it is you're leaning with where the move went. I mean, you're leaning long delta. Yeah. Quite a bit. I don't know what the position deltas or whatever are, but I would say you're leaning decently long delta. So you're long, so your Greeks are going to be long delta, long Vega, right? So that really,
you need some movement. And because it's a zero, I mean, this one you can set up a back test, however, but this one, the idea is just a ride or die. So, chat, if you want to see some iterations, drop us. We got about 10 minutes here. Drop us a note. Dan, what do you think about making it, let's look at this curve. See, this curve's, I mean, fairly.
I like your reiterate. I like what you did. I mean, when you look at this, I like the one where you took out the short put.
Okay. I thought you might go there.
I just say, the few times we go down and if things explode, you say, boy, I wish I didn't have that short.
Well, this I think is actually going to take us full circle back to the blackout whiteout specific dates conversation. Because here's why. Yes. Okay. So look at this. So we've got a big winner here. A big winner here, and then a big winner here. So here's a question to posit. When you have a back test like this, there are people who would clip those winners out of this because they want to go beyond punishment into pain for their back test. And what do you think? Like, this backtest this is a more Talebian backtest because it's uncapped, Dan, right? That's what we did was we uncapped the put. And actually with this variation, it lost in 2022, but it just had a monster year in 2024. And you could see and this is obviously from a single put when we had a long put that went here. We can sort this by, we'll just filter it. Let's just look at some winners. So we had a long put that went very, very in the money. Here's
April. It had to be April.
Yeah. So here's one from April. I think that is 21. Yeah. This is, but here's what's crazy when you look at it. That's not even this one. That's this one. Is that this one? That's this one right here.
Yeah.
It doesn't even look that significant on the replay. We're scaling the contracts here. So the farther in time we go, it's going to, if we go up, it's going to take a bigger move, but you have these, you have this winner here. Let's look at this trade replay here. And let's get rid of the VIX.
One is mainly like you're looking at when you have a big down move and it's not even, the price is important, but when the vol goes through the roof, you can benefit. Whereas if you have that short put, you're severely limiting it.
Right. And here's another one. This is that FOMC day this is one day I do remember because of the day.
Wow.
This is another one where you put $15 down and this is a winner steak dinner evening. And you get those in this back test. Now, will those continue? Nobody knows. Here's another one. Okay, so this is after August 5th, I think, was the yen carry trade. This was a couple days after it. And I don't remember this one at all, but apparently we had a 120-point sell-off from 1046 to the end of the day, because this is another one where a single long put was worth over 10 grand at the end of it. And you see those. So there's this whole philosophical discussion of, do you clip some of these huge, do the winners? Here's the philosophical discussion to Dan and the chat. And the chat has a couple ideas of what they want to try. in a backtest like this, do you ever clip the winners when you feel like you have a winner that makes the test unreasonably good? That's the question. In a backtest like this, where we've got, 3 or 4 winners that we could go through and black them out, strike them from the specific dates very easily. Is that going to make the backtest more believable if we don't include those huge winners?
I would say no. I would say the whole purpose, at least my understanding of this, the whole purpose of taking out the short put was what we found, right?
Yes.
I don't want to. I mean, if you said, okay, take out the 3 or 4 biggest, no, that's why I did it. I did it to get the 3 or 4 because the 3 or 4 are going to overshadow. Now,
and it happened more, when you look at this, you're like, oh, it happened one time. Oh, here's maybe a second, maybe a third time. When you go back and look, actually, the biggest winner was up here. You just can't tell from looking at the graph in either linear or log, just because of the shape of this graph. We have this winner happened when the portfolio was much smaller.
Yeah.
And it wasn't much smaller after that day, Dan.
No, see, to me, I would, and I don't know, I'm still looking at the data but my at least inherently what I would think if I had an automated RIC and type thing like this, and the VIX was at 15 or 14 or 13 for a while. Now, again, the one thing I want to say, vols can stay a lot longer than they can stay up. If VIX hits 20, 25 or 30, it doesn't usually stay up long. But if it goes lower, it could stay there a while. But I would be very tempted if I had an automated RIC when the VIX is sitting there and it's down there for 15, 14, 13 for a while. It's like, I would be very tempted, you'd want to check the data to up my size. Because it's like, okay, the VIX is low, 14, 13. And then you start hearing, from the contrarian point of view, you start hearing all of this. Oh boy, we're going to 9. We're going to 4. It's like, at that point, I would slowly tick up my size, because it's like, you want to be careful, but I think it's how long, when we're at 15, we're at 14, we're at 13, we were, again, a week ago Friday, we hit 1490 in the VIX, and we closed at 21, but we traded at 22, 23. So I just think that, I look at low volatility as an opportunity to, that's when I want to be more long Vega or consider it. And especially if you're leaning a little long delta on a 0 day, that makes sense to me. But I would rather, in a low vol environment, get rid of the short put, unless the numbers really support.
So that's actually a super interesting concept. And one of the things that's interesting is if somebody was trading multiples of this trade, there's this idea that with automation, people can do more than one variation on the backtest.
That's a good point. Yeah. And
that would be tough to do manually. But if you're automating it, it's just, a couple more buttons to click. Right. If you were going to trade more than a one lot, there are people who do that, who trade both versions of it. And speaking of another version, I shout out to the chat. We have 2 interesting ideas. I think we're running up against time, so we're only going to do this last one. So Sujeku, I see your idea, and maybe we'll try to do that on a future episode. General Zod had an interesting comment. Shout out Zod. The comment I made about how if you have a percentage based backtest, that you're ignorant of the cost, and you're ignorant of the vols. Well, you're ignorant of the vols, which is what determines the cost, really. His idea was to put a premium. So if we take this original thing and put a premium filter on it, this makes it even more favorable. You win 2/3 of the time, and your winners are bigger than your losers, both your average and your max. And it really cuts down your exposure. Let me see if I can find, is this okay. Yeah. So here's the version. So we go from 209 trades, and here's what I kind of like about this. And then we'll leave these as our parting thoughts. So you actually end up interestingly, which this may be counterintuitive, here's the original A, B. This is like the eye chart of the doctor. B, A, A, B. Which one looks better? B, A. We went from 209 trades to 188 trades. So we cut out about 10% of the trades.
Yeah.
But here's what's interesting. We ended up with a higher ending capital on a fixed with debit trade. Why did that happen? Well, the win percentage goes up, the capture rate goes up, and the max losers go down. So I think we can do a dive into it, but I think what happened is you just cut those losers and you cut those hits to your capital while keeping a bigger percentage of your winners. So I really like that idea of having a max premium, and by adding percentage with a max premium, that's a way of accounting for both a back test that can go over time, but also take into account the vol, because essentially when you add that premium filter back in, you're saying, hey, I don't want to pay too much for this trade when it gets too expensive.
Hey, Matt, could you show that real quick in the where you do that max premium? I've never used it. How do you?
Yeah. So this is the original.
Yeah.
And this is the max premium. And the max premium is actually in the Punisher at the very bottom. And it's just use min max premium. You can use it for either credit or debit. So I will do this. I'm going to save this version.
Okay.
And we'll call it, we'll just give it today's date, which is 8/4, share test with others, the 00 show. And I will drop this in the chat. And with that, it's almost go time here. So we'll we will let you guys go. Just one note, we are going back. Actually, we had some people ask for this. So we are going back and taking the 00 shows and giving them chapters and titles and all this exciting stuff. Some of them have backtest links, but if you are somebody who can't watch the show every day and you want to see what happened on the show, you can now go back and let's see. Sorry, I'm doing a couple things at once here. You're stuck with me. I'm not quite as quick as Troy, but there's the link. You can go back and look at past episodes of the show and have a little bit of idea what's on the show, what we're going to do on the show, that kind of thing. So there's the link. We got about a little over 5 minutes to the bell, enough to refresh your coffee. And I think Troy's going to be back tomorrow. We should be back with a full squad. So
full squad.
have a great day, everybody.